Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. So now I'm starting a new topic in advanced aspect of income tax. The new topic is deductions from gross total income. Deductions from GTI. Last video I have completed the topic set off and carry forward of losses. So in that two theory videos and three videos on problems I have completed. So if you are regularly watching one after the other videos, then definitely you will get the complete command. Don't join in between and don't leave in between. Because this income tax subject is like that where provisions are there. And every chapter will be linked with one another. So if you have not watched, I suggest you to go to the playlist of my channel, select the subject Advanced Aspects of Income Tax. Watch the earlier videos, get a good command on Income Tax Act 1961 provisions. Now in this video, I'm going to start deductions from GTI. So before starting the explanation, take a screenshot of the points which I have written on the board so that it will be helpful for you for revising before examination. Viewers. So already in the last videos I have explained you Income Tax Act has given the procedure of how to compute the income of a person. The head of income, 5 heads of income has been specified. Income from salary, income from house property, profits and gains of business and profession, capital gain, other sources. Individually we have to calculate the income under each head. Then we have to aggregate all the incomes under the 5 heads. The aggregate of incomes under the 5 heads is called gross total income, GTI. From gross total income, deductions are allowed by Income Tax Act. The deductions are given under section 80C to 80U. So after giving all these deductions, then we will get the total income. On that total income, tax will be applied. These deductions from GTI are the extra deductions, other deductions than the deduction already assessee got from each individual head. Example, while computing income from salary, deductions were allowed under section 16. While computing income from house property, deductions were allowed under section 24. Similarly, so many deductions are there from profits and gains of business and profession. Deductions are given under for capital gains, deduction from capital gain, other sources. So individually deductions are given under each head. Apart from the deductions, after calculating gross total income, some more deductions are given. These deductions are from 80C to 80U. So here, while computing the total income of an SSS, some deductions are allowed from GTI in addition to deductions that are allowed under different heads. So these deductions are allowed 80C to 80U. These deductions are not allowed specifically 4 items you have to remember. From these 4 items, deductions will not be allowed. What are the 4 items? LTCG. From long-term capital gain, the deductions from 80C to 80U, not allowed. Similarly, winning from lottery, horse races, casual incomes, deductions are not allowed. Similarly, long-term capital gain on transfer of listed equity shares and equity-oriented units of UTI. Similarly, short-term capital gain on transfer of equity-oriented units of mutual fund. So, from these 4 items, deductions under section 80C to 80U are not allowed. Now, the aggregate of deductions allowable under section 80C to 80U is limited to GTI. That means the deduction should not exceed the GTI. Maximum deduction which an SSC can get is up to the amount of GTI. That's all. Deductions should never exceed GTI. If deduction exceed, then income will be negative. Total income will be negative. The Income Tax Act says total income should never be negative. So give the deductions only up to the maximum extent of GTI. That's it. The following are some of the important deductions available to an SSC whose status is individual. Because right now we are studying about the provisions of assessment of individuals. So these are some of the deductions that are available under section 80C to 80U for a person who is an individual. Just have a glance under which section for what we are giving the deduction. Later on for each deduction, I'll explain in detail what are the provisions. Right now, simply remember which section and what it deals with. 80C. 80C, this is the most commonly applied deduction. Most of the SSCs will get the deduction under section 80C. So 80C deduction is for qualified savings. Then 80CCC, payment or deposit in pension scheme. If a person has deposited some amount in pension scheme, 80CCC. 80CCD, payment to new pension scheme for government and other employees. A new pension scheme has been started by the government for government employees or other employees. 80CCD. 80CCE will limit the deductions for 80CCC and 80CCD. So 80CCE will put an restriction, which will limitation on the deduction. Then 80D. This is also most commonly used deduction. So 80D is concerned with medical insurance premium. When an SSC has paid medical insurance premium on his own health or on the health of the family members, I'll explain in detail afterwards. So 80D, medical insurance premium. 80DD, deduction in respect of medical treatment and maintenance of handicapped dependents. If the SSC has some dependents like children or father or mother, we'll go in detail afterwards. So if dependents are there, handicapped dependents are there on the SSC, dependent on the SSC, SSC has made some payment or maintenance or medical treatment, then deduction will be given under section 80DD. 80DDB, medical treatment or expenses of dependent, not handicapped, but any dependent on the SSC. If a person is there who is dependent on the SSC and SSC has incurred some medical treatment on the dependent person, deduction under section 80DDB. 80E, interest on higher education loan. Then 80EE and 80EA, interest on home loan. 80EEB, interest on loan taken to purchase electric vehicle. So time to time, the government will give different forms of deductions. So a number of deductions will be added or deducted. So here 80EEB is the new deduction which is given for interest on loan taken to purchase an electric vehicle. The government intention is to promote this electrical vehicle to conserve the energy. Then 80G, this is also most commonly applied deduction, that is 80G, donations. When an SSC has given the donation, deduction will be allowed. But to whom donation should be given, I'll explain you after completing this. Then 80GG, deduction for rent paid. 80GGA, donation for scientific research and rural development. These are the donation given. And 80GGB and 80GGC, donation to political parties. So these are the deductions. Apart from that, 80IAC, deduction for startups. IBA, 80IBA, developing and building housing projects. Then JJA, income from collecting and processing biodegradable waste. 80JJAA, deduction in respect of employment of new employees. 80LA, offshore banking units. 80PA, deduction in respect of certain income of producer companies. 80QQB, royalty income of authors of books. Then 80RRB, royalty income from patent. 80TTA, interest on saving account other than senior citizen. Then 80TTB, this is interest on deposit for senior citizen and super senior citizen. 80U, handicapped resident persons. So all these, many more deductions are there. These are the important deductions. But among these important deductions also, some deductions will appear very frequently in the problems. The deductions which very frequently occur in problems are 80C, 80CCC, CCD, CCE, 80D, DD, DDB. These are the very important deductions very frequently will come across. 80E also will come. Then 80G, very frequently it will come. Then next one is 80GG. And next one is 80TTA. ATQQB, that is royalty, and TTA, interest on saving account, interest on deposit, that's all. So these deductions which I have explained just now will frequently come in examination. Other deductions will rarely come. IA, CI, BA, deductions are there, but in the coming problem, very rarely it will be asked in the problem. So these are the deductions. Now, each one of the deduction, I am giving the explanation. Remember, the problems depend on this theory. So if you want the complete command on the problems, you have to listen the theory with full concentration. You must have the patience. Watch the theory, listen the theory till the end. Then only you can get the command. Now, deduction under section 80C. The more important, very first important deduction is deduction under section 80C. It deals with qualified savings. Income Tax Act says if a person has earned the income and he wants to reduce his tax liability, then he have to save some money from his income. From his earned income, if he saves some money, then deduction will be allowed. When deduction is allowed, his total income will come down. When total income comes down, tax liability will get reduced. Tax liability will get reduced. So what are the savings? Those savings on which deduction is allowed are called qualified savings. If you save in any form, deduction will not be given. SSC says I have saved the money and put it in my almirah, in my locker, in my house. Income Tax Act says no, no deduction. It is not a qualified saving. Income Tax Act says where we are asking you to save, there only if you save, then deduction will be allowed. If you save according to your own will, we will not allow deduction. The qualified saving means those savings on which deduction is allowed under section 80C. That is called qualified savings. The government from time to time will notify which are the qualified savings. These qualified savings are not coming since long. Every year, time to time, whenever the government thinks, they will change the qualified savings. They'll add more items in the qualified savings. Now, contribution. Best example of qualified savings are contribution to Provident Fund, PF. Contribution to Provident Fund. Life insurance premium paid. These are the best examples of qualified savings. All savings, all qualified savings are savings. Every qualified saving is a saving, but every saving is not a qualified saving. Then following are some of the qualified savings. Now I am listing out, I am giving examples of those items which are called qualified savings. First one, contribution to Provident Fund, PF. Where an SSC contributes some amount in the Provident Fund. What is Provident Fund? What are the different types of Provident Fund? After this video, I'll explain you in detail. Time being, remember, contribution to Provident Fund is a qualified saving. Then life insurance premium, just now I told, classic examples are to contribution to Provident Fund and life insurance premium. Third, premium paid under unit linked insurance plan, ULIP. It is called ULIP, unit linked insurance plan. The next one is contribution to post office cumulative time deposit. These items you have to remember because in the coming problems, these items will be given. Now we have to decide that this will qualify for 80C. This is a qualified saving under section 80C. So you have to listen carefully. So contribution to post office cumulative time deposit, then subscription to notified central government security. Central government will issue security time to time. Best example, National Savings Certificate, NSC, 8th issue and 9th issue. These are the government securities which are issued by government. So if the public has purchased those security, if the SSC has purchased the security, it is called qualified saving. Next, any amount paid as repayment of house loan. So during the previous year, if the SSC has repaid a housing loan, that will also qualify. Next one is subscription to notified deposit scheme of National Housing Bank. If a person has taken a loan from National Housing Bank and subscription to notified deposit scheme, that will also qualify for deduction under section 80C. So we have seen 7 examples of qualified savings. The last one was subscription to notified deposit scheme of National Housing Bank. The continuation. After 7, the 8th one. The 8th example of this qualified saving is contribution made towards Dhanaraksha, Jeevan Dhara and Jeevan Akshay and any other policies of LIC. Life insurance company has started different types of policies. The names of the policies are Jeevan Dhara, Jeevan Akshay, Dhanaraksha, etc. or any other such type of policies. Then amount contributed in that policies or deposited in that policies, that will qualify for deduction under section 80C. Next one, contribution to superannuation fund. The employees may contribute some amount to superannuation fund, that will also qualify. Then deposit under National Housing Scheme. Then investment in units of equity linked scheme of LIC, UTI and other mutual funds. So if an SSC have made the investments in equity linked units of UTI, LIC or mutual fund, that will also qualify for deduction under section 80C. Deposit in pension fund set up by your UTI and other mutual funds. The UTI and other mutual funds have set up a new pension fund. So if a person contributed some amount in the pension fund of UTI or other mutual funds, qualify. Then payment to group insurance scheme. Then subscription to equity shares or debentures of eligible issue of public companies. The government, the income tax department will notify that these companies' equity shares or debentures, if the public subscribe to the shares and debentures of eligible companies, not every company. The Income Tax Act has given the list of companies. If a person, if an SSC invest the money or subscribe the shares and debentures of eligible companies, eligible public companies, that will also qualify. Next one is subscription to units of any mutual fund approved by CBDT, Central Board of Direct Taxes. The CBDT will notify the subscription of units of any mutual fund. So until and unless CBDT has notified that subscription will not be eligible. Once if it is notified by CBDT, then the amount invested in mutual fund will also qualify. Next one, deposit in National Savings Scheme 1992. Tuition fees paid for children. If an SSC has paid tuition fees of the children, that will also qualify for deduction under section 80C. Fixed deposit or term deposit in scheduled banks. If a person make fixed deposit or term deposit also it is called in a scheduled bank, that will also qualify. Subscription to notified bonds of NABARD. NABARD means National Bank for Agriculture and Rural Development. National Bank for Agriculture and Rural Development. So subscription to notified bonds. So Income Tax Act will notify that these are the bonds which are issued by NABARD will qualify for deduction. So only notified securities will be qualified. NABARD. 5-year time deposit in Post Office 1981. Deposit in Senior Citizen Saving Scheme 2004. And lastly, Sukanya Samriddhi account SSA. So the government has started a new policy, a new method called Sukanya Samriddhi account. So if a person has deposited the amount in this account in a bank, then so what is that name of the account called? Sukanya Samriddhi account SSA. So if an SSC has deposited some amount in SSA in a bank, Sukanya Samriddhi account, that will also qualify for deduction under section 80C. So in this video I have explained you regarding the basic thing. First of all, deductions from GTI and what are the examples, what are the different sections for what deduction will be allowed, and qualified saving. The first deduction is 80C, that is qualified saving. What are qualified saving? I have explained you. Every saving will not be a qualified saving, but every qualified saving is a saving. The government will notify from time to time which savings will be called qualified savings. So 22 examples I have given. So if you watch this video, the points will be in your mind. So whenever we solve the problem, in that problem, if these items comes, immediately it should come to your mind that this is a qualified saving under section 80C. Inshallah, we will continue our discussion on these deductions in the next video.